This next video is going to be an introduction to the Fibonacci retracement tool. Now, this is a very powerful tool. It can be used for a number of different things. In this video, we are going to primarily be focusing on the Fibonacci retracement tool to identify our kill zone, which is our zone that we're looking for potential entries in confluence with other confirmations. We never want to take any of these individual confirmations that I've been going over and breaking down individually in these videos by themselves. We always want to stack our confirmations, as trading is a game of probability. In addition to the entry zones, we're also going to be focusing on our TP, our profit taking zones. And I'm going to show you how we can identify these, how we draw the fibs, and a couple other helpful things that you should know about the Fibonacci retracement tool. So I'm going to quickly draw the Fibonacci retracement tool, and I'm on trading view. And if you go 1, 2, 3, 4 icons down from the top, you can click this button here and you're going to see a number of different measurement tools, a number of Fibonacci tools. The one that we are focusing on and the primary fib tool that we use is the fib retracement tool. So I'm going to click this and I'm going to just draw this on my chart. Let me take off the horizontal lines so we can easily see here. Okay, so there are the levels. I will also share with you my fib settings. So if you would like to duplicate the exact settings that I use, you have them here. There's a number of different things that you can do with these settings. You can add a trend line. You can change these levels. I normally use dotted lines. That way it keeps the chart for me a little bit simpler and less cluttered. You can change the thickness. You can change the colors of the individual levels. You can use one color. There's a lot of cool things that you can do with these different settings. You can go mess around with them on your own time, but there are the settings. There's also a cheat sheet in the Discord, which I referenced in the market structure video, identifying the levels, the kill zone levels, and the TP levels as well for a bullish market structure and for a bearish market structure. So when we're looking at drawing the Fibonacci tools, right, they're going to best serve us and work best when we have a trending market. Now, when we're looking at Great Britain USD, this is the chart that I used for the market structure video. And I'm just going to quickly get out of replay mode. We have a bullish trending market here. And one thing that we are looking for is two extreme points that we can draw our Fibonacci tool from. So I'm going to go back to the candles and I'm going to go into replay mode. Let me go back to here. Actually, let me drop down a time frame here and I'm going to do this here. So when we're looking at this current price action and in confluence with what we were looking at on the daily time frame, we have our swing low to our swing high. We have an expansion which broke out of this range. We had our pullback and we had our new high that was created here. So we are focusing on this trading range. We're measuring this move here. So I'm going to delete this. I'm going to draw the fib from the swing low all the way to the swing high here. Now, when you're looking at the Fibonacci tool, you almost want to look at it like a measuring tape, because all we are doing here is we are measuring this move. So let's say this move from this low to this high was a $20 increase on whatever this is. It doesn't really matter that this is GU. Let's just say that this was, a stock, and this stock increased in value from this move to this move $20. So let's just say this price point here was 2020. And with this move up here, it increased value $20. So that would make this stock $2,040. Now this Fibonacci tool, we can see at the top, it is marked with a 0. Then we go down to the 50%. I don't personally use any of the numbers between the 0 and the 50% because I'm primarily focused on price coming into our kill zone, which I will explain a little bit further into this video. So this 50 here, and you can display these numbers however you want. I just think they're a little bit cleaner like this, but if you go back to the settings, you can actually make those values percentages. Let me see if I can find it here. You can also include the price on them, so you can see when I click price, it adds the price for each one of these Fibonacci levels, right? And I can make the values into percentages. So I'll make it a percentage for this video to keep things very simple. So at the top of this move, we can see we have 0%. Then we come down to the level that's 50%. Now this 50% is the 50% of this move here. It's the exact middle of this move. So if we were looking at these two price points from the $20 increase, this level here would be 2,030. It's the exact middle of this swing low to this swing high. So when we're looking at price and we have our 2 points identified, our swing low to our swing high, we are looking for price to retrace a certain percentage of the expansion, right? So what I mean by that is our kill zone is identified from the 618 to the 886. So I primarily like to focus on the 71. I like to focus on the 71 to the 78.6, primarily down to the 886. And the reason for this is I am trying to get a discounted price. I'm trying to get a better price because we had a $20 increase. So if you're looking to enter here, when price pulls down to the 50% mark, this is a $10 increase that you would be looking to get in on from the start of this expansion. So the deeper price comes, the better price that we are going to get for potential buying opportunities. So when we're looking for a buying opportunity, and we're using our risk to reward tool, I'm looking at the long because we're buying here. Short position would be for selling. So we're looking at the long tool. And let's say we're looking to enter at the 71 retracement level. Our stop loss would be at the 100%, which would mean that if price were to retrace down to the 100% mark, that means price has retraced 100% of the initial move. and we measure this 100 is significant because if price were to break this 100% and break the start of the expansion, and we would have price close below this level, this would be a break of structure. So if you reference the structure video that I previously made, this would be aligning yourself with market structure. Now, we're looking at certain fib extension levels, which are these levels up here for profit taking. Now, these are levels for profit taking because if you recall in that market structure video, I referenced the analogy of price moving in waves and how it would be similar to a bow and arrow, right? In order for a bow to be shot forward, you put it, or excuse me, an arrow to be shot forward, you put it in the bow and you put it against the string, you grab it and you pull back and then you let go and it moves forward. It's the same thing with how price moves in waves. When we have the expansion and price retraces, we would be looking for that continuation. And when we get that continuation up here, these fib levels up here, these TP levels, profit taking levels, these are the levels that we can anticipate a new retracement. Because now we would have a higher low confirmed and a higher high confirmed in a new trading range. And the process would repeat. So let me delete these. So if we're looking at this expansion here, oops, sorry. Trying to move the chart over. So if we're looking to enter here at the 71% retracement level, and our stop loss we know would go somewhere in this area here, the start of the retracement. And we are looking at the fib TP levels. We know we're taking profit somewhere above this high, whether, you know, of course it's going to vary depending on trade plan, but let's just say we're taking it here. There's two things that are pretty certain here: our stop loss and where we're looking to phase out of our position. Now, what's going to really determine the risk to reward, and what I mean exactly by getting a discounted price, let's say we are going to buy when price retraced 50%. Now that 50% would be after we had a $20 increase from here at 2020 and price increased to 2040, and we were looking to buy when price retraced 50% at 2030. Now you can see that we have a bigger stop loss. Our stop loss is still ending at the same spot. We're still looking at these profit taking levels, but you can see our risk to reward has gone way down. We're not getting really good pricing. This is more premium pricing because we had a $20 increase and now we're buying at a $10 increase from where the move started. Now, you can see here, this risk to reward is more on the retail side where you're getting 1-to-1, 2-to-1. This example here, buying at the 50% of this retracement, we would be getting 1.5 on our money. This means if you risk 1% on this setup here and you achieve your target, you would increase your account by 1.5%. If you risk 2% on this example, you would be risking 2% to increase your account by 3%. So as price retraces, our stop loss would remain the same. We're still phasing out in our TP levels. We'll use the same TP level here at this level here. But now let's say we're going to buy at a more discounted price at the 71. Now you can see our stop loss is smaller, but it's still based in the same area. Our TP is still at the same level, but now our risk to reward has increased from 1.5 to just under 3.5. Meaning now if we're risking 1%, we would increase our account by 3.5% if we achieve this target. And if we risk 2%, we would now increase our account by 7% versus the 3%, a 4% increase for the same target. Now, let's say we are looking for price to come even deeper at the 886. Now, if you reference the cheat sheet, we refer to the 886 level as the Black Friday discount, meaning you're getting a very good discounted price, because after that $20 increase, we're back at, you can take out your calculator here, right? Because this 50% would be our $10 increase. So let me take out the calculator here. And if we have a $20 increase and we are looking to enter at the 886 percentage, right? Now we're getting a retracement of $17.72, right? So minus that $20 increase, we're getting price at $2.28 retracement from that $20 increase. So we're getting a discounted price, which allows us for a better risk to reward. So now you can see the same TP level, the same stop loss level, but now our stop loss is significantly smaller and our risk to reward ratio has dramatically increased versus the 50% level here, which we saw a 1.5 risk to reward. So with this example, risking 1% and increasing our account after hitting this TP level, we would increase our account by over 10.5%. Risking 2% here, you would increase your account by over 21% for the same exact TP level. Okay, so that is what we refer to as getting a discounted price. We're looking for the best price we can get after the market has shown us a willingness to go higher and has created a higher high, or in a bearish market, a lower low. We would be looking for the retracement. There's examples on that cheat sheet for both examples here, right? Just inverted. And we would be getting a better risk to reward, more value on our risk. And this is where we really separate ourselves from a lot of the other retail strategies out there, because this is what you're looking at for most of those strategies: 1-to-1, 2-to-1, 3-to-1, and we can achieve a much better risk to reward to increase our account much higher for the same moves by getting better entries. Now, like I said, we can use these Fibonacci tools a number of different ways. We're going to get into more advanced Fibonacci tools or videos and how we use these for multiple different things, including looking at 50% of candles we're using for entries to mark up imbalance, 50% of imbalance, a lot of stuff like that into the future. But for right now, we're just focusing on our main swing points for when we have a trending market, to identify a trading range, to identify areas that we will get the best discounted price, to allot for the best risk to reward, and areas that we can anticipate price to start retracing and to start phasing out of our positions. So hope you got value from this, and I will see you in the next video.